Hi, this is Teena Jain Kaushal, and you are watching BT TV. The Income Tax Department has issued a new circular clarifying rules on taxability of non-unit linked life insurance policies. This is following the budget announcement that maturity amount of traditional policies having the aggregate premium exceeding rupees 5 lakh will get taxable. Joining me today is Sudin Sabnis, partner Nangia Andersen, who will help us to understand the fine print of the new tax rule. Welcome, Mr. Sudin. Please tell us what are these new rules about?
So thank you. Glad to be here. So, Tina, basically, prior to the budget 2023, uh, the payouts what were made on life insurance policies were generally tax free. So there was an exemption specifically what was there with respect to a payout of a life insurance policy. There were certain conditions attached, but generally they were tax free if those conditions were met. Now there has been an amendment wherein they have introduced a key rule. So the rule is basically if the premium what is paid on the policies what are taken after 1st of April 2023 as a single policy or as an aggregate of the policies what are being taken post 1st of April 2023 exceeds 5 lakhs in a financial year, then the maturity payouts for such policies will now be taxed. This is the key change what has taken place. Now this will be taxed as income from other sources to the extent the maturity proceeds exceed the premium payouts, the premium what has been paid. Now, thing is, there were a lot of ambiguities in the meanwhile since this change had come in, because there were a lot of clarifications required as to, for example, what happens to my existing policies, what were taken before 1st of April 2023, what happens for example, to the threshold of 5 lakh, how is that to be calculated? For example, there's a GST element as well, but what goes in the premium, whether that is to be included in the calculation of 5 when it comes to a term policy, is that also to be included in this calculation of 5 lakhs? What happens in case I've got multiple policies? So there were a lot of ambiguities what are now sort of addressed by way of this circular. So this circular is something which is a guideline. A lot of examples have been provided, which generally clarifies on the taxability of the payouts what will be received with respect to such policies.
Okay, so if I understand it correctly, any policy bought after 1st April 2023 on or after 1st April 2023 will be taxable in case of traditional policy exceeding 5 lakh, and before that it won't be taxable. So can you also tell us how the threshold of this rupees 5 lakh will get calculated?
Yes. So as so yes. So basically, when it comes to the threshold of 5 lakhs, so this has to be seen. For example, if there's a taxpayer who's taken one policy after 1st of April 2023, then obviously if the premium what is paid with respect to this one policy exceeds 5 lakhs, obviously that becomes now taxable. If say there are multiple policies what are taken post 1st of April 2023, then you have to see on an aggregate basis. Right. So if you have to see on an aggregate basis, if the premium exceeds 5 lakhs, so then to that extent, the maturity payouts will become taxable with respect to those policies where the premium exceeds 5 lakhs.
Okay,
Again,
let's yeah.
yeah,
So if I can take one example, supposedly I have three policies of rupees 2 lakh each on 1st
Mhm,
April 2023. So will
mhm,
all three be exempted, or the third one particularly where I'm actually crossing this limit of 5 lakh will be taxable?
absolutely. So in this case, only to the extent of the third policy wherein it exceeds the limit of 5 lakhs, only that policy will be taxable. The first two will still remain tax exempt when it comes to the maturity proceeds.
Okay. So can I also decide which policy to be tax exempted to maximize my tax benefit? Is this provision available?
Yes, so this has also been clarified in the circular. So what the circular provides is that where for instance the policies are being taken in case of multiple policies, of course, wherein uh, you do have payouts which will exceed the premium of which will exceed 5 lakh rupees. You can choose to the best possible extent whatever is beneficial for you, what will become taxable and what will become exempt. So that is in the hands of the policy holder, or basically of the taxpayer, right? So this
Okay.
is something which is an option what has been given. So for instance, let's take an example over here, wherein you do have a policy what has been taken, say on the 1st of April 2023, see a premium of rupees 2.5 lakhs. Frequently, you do take in the next year a couple of policies again, say for example premium of say 2 lakhs, and the third policy having say a premium of 2.5 lakhs. So over here, what has been given is that the first policy, what has been taken as on the 1st of April 2023, having a premium of 2.5 lakhs, is below the threshold of 5 lakhs. The maturity proceeds remain exempt. The balance two policies, what were taken, for example, in the subsequent year, one having a premium of 2 lakhs and the other having a premium of 2.5 lakhs, the policyholder can choose, the taxpayer can choose which of these policies he would want to kind of claim as an exemption. Obviously, the maturity payouts for the premium having premium being 2.5 lakhs will be more. This is generally what will be beneficial for him. He can very well choose this to be exempt under the respective provisions. So this is again a welcome clarification. So whatever is more beneficial for the taxpayer can be adopted for an exemption.
This is very interesting that policy holder actually has a choice liberty to choose which policy he can get tax exempted. So this is a good
Yes.
news for policy holders. But coming to the GST part, will GST be also included while calculating this limit of 5 lakh?
That's and what was interesting and what was subject matter of lot of ambiguity before. So thankfully now this is something wherein we do have an express clarity. The circular specifically mentions that the GST portion has to be excluded, right? So that will not be taken into account for the calculation of 5 lakhs limit.
Okay. And also we buy riders along with our life insurance policy. So will rider premium be included in the limit?
Yes. Rider premiums would be included in this limit.
Okay. And the most important point, will death benefits received under term or traditional policy be taxable?
See, the death benefits continue to be exempt. Okay, so there is no change when it comes to the death benefits, be it traditional policy or be it a term policy. In both these cases, they continue to be exempt when it comes to the maturity proceeds. What is also interesting over here is when it comes to a term policy, which is a pure term policy which does not have a return on premium clause attached to it. In such cases, even the premium what is paid in such term policies will not be included in the calculation of the 5 lakhs limit. So the
Okay.
maturity proceeds continue to be exempt, and even the premium to the extent of such term policies will not be included in the calculation of the 5 lakhs threshold.
Okay, thank you, Mr. Sabnis. With this, we wrap up the show. Important point to note here is that you need to pay tax on non-ULIP only if aggregate premium exceeds rupees 5 lakh and which is bought on or after 1st April 2023, and not all policies but that particular policy which cross the limit of rupees 5 lakh will be taxable. Thanks, Mr. Sabnis, for explaining all of this to us in detail, and keep watching BTTV to stay updated and know about the latest trends and news in the business world.
Thank you. Pleasure.
If you like the video, do like, comment, share and subscribe.